Hello everybody, and this week is the week where I either I'm very right and this is the top for the rest of this year, the top for S&P 500, for Ethereum, for Bitcoin, or I am invalidated and we are really at the brink of that. So I have been exploring further by my unique research that I have done for myself yesterday, and I'm going to share that with you. And I was basically exploring what am I gonna be betting on if I get invalidated these weeks, basically, because we are literally at the top of my level. S&P 500, you can see it even on 4 hourly. It seems that the level is working, this red level. Basically we are bouncing from that. I didn't make this area based on these 4 hourly candles. The 4 hourly candles formed based on my area. But we are at that level. Tesla is at that level. Basically, I don't have that. Well, actually, this red line is my absolute top that I was thinking, and this line is the bottom. So we are in that. I sold the most. Ethereum is on that level because Ethereum has hit. When you measure the collapse, the crash Ethereum had in Q1, basically you can say Ethereum has recovered half of it. It's this 0.5 Fibonacci, so that's also, and also I think it got very close to 50-week moving average, and it actually bounced from 200-day moving average. Bitcoin is also very close. I was tweeting a month ago that there is a short liquidity that will be taken probably, and that short liquidity was there. It went just above that. It took the liquidity, and it seems to be now rejecting. So basically everything, absolutely all risk on the planet is in the levels where I thought that would be the absolute top if this is a bear market rally. So if we go for few days higher in anything, it's probably everything will go at the same time, a little bit higher. I'm invalidated. So what then? And I'm going to follow up on my research from December. I want to share you first 2 screenshots just to remind you. Okay, just making sure you see that. So this is a first screenshot, and this is a research from Bitcoin Data 21, where he's done a research when he was exploring what is the average monthly returns for the year following the more significant new all-time highs. I'm not sure what is the criterion based on which he picked those years, but he made basically monthly returns of these years and then the average, and he showed it on here on this chart with this fat red line. What is the average? And what this was basically showing, that there is gonna be a good rollover in Q1 2025, there is gonna be corrective spring 2025, there is gonna be new all-time high, new peak, or in the summer 2025, or at least a very strong rally, okay? At least a very strong rally, and then basically downhill for the rest of the year in the second half of the year. That was what his research was showing. Then I have another. It's also from my presentation from last December. I was showing the average when Republicans take over the Democrats in the elections the following year. So there is also very similar picture. This was the average performance. So again, good rollover in Q1, but corrective spring pretty much, corrective Q2, and then Q3 actually a top, maybe even new all-time highs, but just strong rally into Q3, and then a crash at the end of the year in Q4. So this is completely uncorrelated research from different source, done based on different logic. They show something very similar, and I have made as a third one, I have made my own with again different logic, uncorrelated. So what I have done is that I have explored that what happened on average the following year after we had 2 years in the S&P 500 that were back-to-back 20% or more, okay? Because we've just had that in 2023 and 2024, we had 2 back-to-back years with 20% and more. You can see it even here. 26% was 2023, 23% 2024. And there were not that many years over the past 100 years where we had 2 back-to-back 20% or more years, okay? Such as splendid years. And those years were only 5. And this is the 6th actually year. 2025 is the 6th year of that. So 1937 was the first, 1956, 1977, 97, 99, and now 25. I have basically dug up a monthly performance. I use the StatMuse monkey as the source of data for these monthly returns. I have put it into the table. I have calculated the average. It's in this line number 7. It's the average. And I have put that on the chart. I have projected, and you can already see where I'm going with this. So what my own research that I have put together yesterday night, what it shows seems like I have just copy pasted the attitude, but I have not. This is a unique research, and it shows the very same structure basically. So strong rollover into Q1, corrective Q2 basically, then surprising rally into the summer and peaking in the summer, and then basically a crash in the second half, with probably the biggest crash actually being at the end of Q3, so August, September, and then basically, but still negative basically months even following that. And then last, what I have done, I have even done simulation for you. So I have simulated this here on this line. I have done that. So I opened the value. I started with the value 5,907 because that was where this year opened, 2025. And then I basically simulated, so I put these average percentages as the simulated monthly closes, okay? And that's on this chart right here. This is a simulation of monthly closes for this year based on my research. The first 2 months pretty much followed what happened, but then there is a deviation because this model was suggesting that only in May we are going to correct strong, and we corrected strong in March, April, so sooner, and we also corrected lower because the monthly close for March and for April, the monthly closes were about 5,600, a little bit below, and my model was suggesting 5,940. So we actually undershot this. We actually we are worse off, I should say, than this model shows. And this model then shows again so a fantastic rally actually, like with the average monthly gains of 2%, 3%, following the low, the spring low. So summer high, and this model is suggesting a new all-time high, and actually even significant new all-time highs, because this model is suggesting that the monthly close during the peak, the monthly close will be 6,304. But again, since we've undershot this model, we've already went below this model's projections. So we have to also assume that also we will be below the expectations in this case. But still, it could be new all-time highs, but it could be only marginal all-time highs. And what is the most important for me is that all of these 3 models unilaterally are telling me that actually it's going to be not the end of the year, not the Q4, like many people rely on, and especially in crypto, is not going to be Q4 where the party will definitely end, and when we will have a top, and after that will come the crash. But the crash will actually occur in the second half of this year. This model is showing that to me very clearly, and this model is even saying at the very end of the summer actually. So around September we will already be crashing for the S&P 500, and keep in mind that cryptos always peak a bit sooner. They have done it again because S&P 500 peaked in February and cryptos peaked in December and January. It was the same 3.7 trillion in both months. And in 2022 it was the same. Crypto peaked about 2 months before S&P 500 peaked, or 1 month even before, something like that. So crypto peaks a little bit sooner as well. It's forward looking kind of. So if the S&P 500 peaks around the middle of the summer, let's say July, August, then crypto should actually peak in the middle of the summer at the very latest. So basically this model is what I will be following once I get invalidated. And yeah, hope you enjoyed my unique research.